John, I am in trouble. I need your help.
I know, Mr. Singh, and I already have the news. Don't worry, I will be at your office after an hour.
John, I've received a legal notice demanding due 12,000 crore in compensation for those affected by the mango juice incident. What should I do now?
Mr. Singh, you're worrying too much. I've been handling cases like this for the past 15 years. Don't worry, I'll take care of it. Just relax and put a smile on your face. Mr. Singh, I will try to prolong this case as much as possible. Your job is to rebuild your image through PR and social work.
My honor, Mr. Singh is guilty. Consuming his drink has left around 6,500 people in critical condition, and 6 have lost their lives. I have sufficient evidence to prove it. My honor, the country demands justice.
I object, my lord. Every factory at different locations was regularly inspected as per standards, and juice samples were sent for laboratory testing. Mr. Singh is fully aware of his responsibilities.
I order Mr. Singh to submit the lab testing report at the next hearing. Until then, the court is adjourned.
Ishan Patel, my company's share price has fallen 80% from its peak. Do something to restore investor confidence.
Breaking news. Court clears Lovely Mango Day and Mr. Arun Singh of all charges. In a major relief, the court has given a clean chit to Lovely Mango Day and its owner, Mr. Arun Singh. During the investigation, all reports presented to the judge were found to be legitimate, proving the company's compliance with safety standards. This verdict comes as a boost for Lovely Mango Day investors, as the company's share price is now back on track, recovering from its previous decline. Market analysts predict renewed investor confidence following the court's decision. Stay tuned for further updates.
We need justice for those who lost their life and suffered. We reject the court's decision and will challenge it in the High Court. Many lives were lost, and we will not rest until justice is served.
Congratulations, Mr. Singh, on this great victory. Would you like to share a message for the families who lost their loved ones? They are now planning to appeal to the High Court for justice. What is your perspective on this?
My sympathies are with them, and I will do my best. But look, this is a highly competitive market. Over the last couple of years, Lovely Mango Day has performed exceptionally well, which has naturally created rivals. There are people who want to tarnish my reputation. However, in the end, justice always prevails.
Hello everyone, my name is Rajat, and in this video we will discussing about contingent liabilities, what they are, why they are important while analysis a company. Welcome to my channel RM Finance. In RM Finance, we don't just talk about the problems, we focus on the solution as well.
Let's discuss the definition of contingent liabilities. Contingent liabilities is the liabilities that the outcome is dependent upon the future event. Some common example of contingent liabilities. Company is facing a lawsuit. If company loses, then company has to pay the damages. Guarantee given for another party loan. If the borrower default, then company has to repay the loan on their behalf. Tax dispute. If the case goes against the company, then company is liable to pay extra tax and penalty as well.
Litigation and tax dispute. The decision could go against us or in favor of us. If it goes against us, then we have to pay significant amount as a damage. Guarantee given for another party loan. If a borrower will default, then we have to repay the amount. Now let's discuss when we will record contingent liability in our financial statement. If there is more than 50% chance of loss and the amount can be reasonably estimated, then it's become a probable. In that scenario, we will create a provision and record it in the liability side of balance sheet. This means the company is acknowledging the potential obligation. Now let's discuss our second scenario. If the chance of loss is less than 50% and the amount cannot be estimated reasonably, in that scenario, the company will not record it in their balance sheet. Rather, they will discuss in the footnote of the financial statement to inform the intended user whether there is risk exists. But it is not enough to book a liability.
Just remember, if there is less than 50% chance of loss, but still there is a possibility of loss. So I will recommend you to go through the financial statement footnote and read it carefully, where you will get the insight, the types, and the nature of the contingent liability.
Let's understand contingent liability with the help of our story Lovely Mango Day. Let's assume the High Court gave an order against Lovely Mango Day and penalize the company to give 12,000 crore as a compensation for those who are affected from food poisoning as well as lost their life during that tragedy. We made some assumption like before giving the court judgment, the Lovely Mango Day net profit is 1000 crore and their net worth is 10,000 crore. Now let's see what's happened after the court decision. Now the company will create a provision in liability side of balance sheet and add 12,000 loss in net income, and that 12,000 loss will be adjusted with 1,000 current year profit. After the adjustment of the net profit, our adjusted net profit is negative 11,000 crore, and that 11,000 crore will be transferred to our reserve. Now let's see what happened to our reserve and net worth. Company's current net worth is 10,000 crore, and now let's see what happened when we transfer 11,000 crore loss from net profit to our net worth. Now our net worth will become minus 1,000 crores. That means company wipes off all their accumulated wealth which they created in past. Now it's become a negative. The contingent liability becomes their legal obligation. To fulfill the legal obligation, now company needs to raise new capital either in form of equity or in form of loan. If company fails to issue new capital, then there will be a chance of bankruptcy. Now we will move forward to our real life case study, and there I will show you how contingent liability affected the most well-known listed company. We will taking a reference from Satyam Computers, Pacific Gas and Electric, Enron, and General Motors. Pacific Gas and Electric Company, which is listed in US, face massive contingent liabilities because of lawsuit linked with California wildfire caused by their equipment. Due to this, the court ordered to pay $10 billion as a compensation. General Motors has numerous contingent liabilities such as product recall, employee benefit obligation, and warranty claim, which impact heavily on cash flow. Similarly, Enron uses special purpose entities to keep the contingent liability off balance sheet. Nowadays, every company has certain amount of contingent liabilities, either in form of guarantee, litigation, or tax dispute. To know that will impact the company future or not, we can use a simple ratio. By dividing contingent liability with net worth, this will give an understanding how big is the risk as compared to the financial strength of the company. If the ratio is less than 30%, we can say the risk is manageable even if the liability becomes real. If the ratio is between 30 to 70%, then be cautious. The company may face a financial pressure. If ratio is more than 70%, then the company is in higher risk. The small negative event could destroy the company wealth and also lead to a bankruptcy.
Now that we understand the concept, let's put it into practice. We'll analyze real-world examples using data from the latest annual reports of top Indian companies. Let's take Tata Motors, Infosys, Vodafone Idea, Reliance Infrastructure, and Tata Steel as reference. Let's explore the 2024 March ending annual report of Tata Motors. Go to page number 347, where you will get the notes of commitments and contingencies. Litigation: the company is involved in legal proceedings, but the company does not believe that too is of a material nature. Income tax: contingent liabilities towards matters and/or disputes pending in appeal amounting to 803.28 crores. Customs, excise duty, and service tax, interest, and penalty amount to 412.48 crores. Sales tax: total sales tax demand that are being contested by the company amount to 986.70 crores. Other taxes and dues, other amounts for which the company may contingently be liable, aggregate to 751.31 crores. Other claims: Jaguar Land Rover, there are certain third-party claims and obligations amounting to 3,486.87 crores. If we add all its contingent liabilities, then we will get 6,440 crores. Let's analyze the risk exposure of Tata Motors due to contingent liabilities by using the contingent liabilities divide net worth formula. Go to page 278 of Tata Motors Annual Report 2023-24, where you will get net worth from balance sheet, which is 93,000 crores approx. Let's divide contingent liabilities with net worth. We will get 7% risk exposed to contingent liabilities. Tata Motors has a 7% risk exposure from contingent liabilities based on its fiscal year 24 consolidated financials. This level is moderate and manageable, but it's still important for investors to monitor, especially if any of these liabilities materialize in the future. Infosys contained dispute of 1,200 crore, income tax and service tax claim of 2,500 crores, and guarantees of 500 crores. If we total them, then it becomes 4,200 crores. Infosys net worth is 93,000 crores and its total contingent liabilities is 4,200 crores. After putting into our risk formula, we will get 4.52%. We can also say that Infosys is in safer side. Now let's talk about Vodafone Idea. No need to analyze risk, look at its net worth, which is already negative. The company has already wiped off all its gains. Just avoid VI before making any investments. As per the latest available data, Reliance Infrastructure's contingent liabilities amount to approximately 6,473 crore and its net worth is 6,307 crore. If we calculate contingent liability risk, then it's around 102%. The contingent liabilities slightly surpass the net worth, indicating a substantial risk that could impact the company's financial stability if these liabilities materialize. Lastly, I'd like you all to calculate Tata Steel's contingent liabilities and drop your answers in the comment section along with the type of risk involved. Thanks a lot for watching, and don't forget to subscribe to my channel for more insightful content on finance and investing.